Welcome to Insights. I'm Eric. Thanks for stopping by today. We're going to be talking about corn. Corn's been a long overweighted market to be talked about, and I've wanted to convert this review into the beginnings of a report. So we're going to have really two sections here. We're going to talk about corn in terms of the evolution of the trade, and which everyone notices when we talk about the inside reviews and normal discussions. We're going to talk about three time frames. We're going to talk somewhat about the energy, and then we're going to talk about the seasonality too. And then we're going to extend this into some more complicated discussions. Some of the things that can be troubling about the grain market, some of the things that we can notice in terms of differentiating the energy build in terms of things that we have seen before, what this means, what the current energy build means. And things of that nature. The intermarket flows, some of the long-term cycles. Corn is a difficult play. It's a difficult market to understand. It has a very long trading history. My database goes back to 1850. I definitely don't have the computer studying the daily trend that far back, because it would just consume enormous resources to do that, and it's a lot of repetition. I cheat on the daily and the weekly cycles, but the monthly we have back to 1959. But we're going to take a further look at corn in terms of the really long-term cycles, and we're going to see where it really stands. The normal part of the review, we talk about the evolution of the trade, and the evolution of the trade is up, up, and up across the three time frames, and this is one of the reasons why corn has been really a bullish discussion on the internet. We have the three time frames in alignment. You can see it's triple up. The computer defines it as mid-cycle, and the X bar, which is the composite cycle, is 0.74. That's well above zero, which is usually the cutoff for early. So this tends to be, I would characterize this as a later mid-cycle, a setup for the composite trend. We're going to talk about what that means and why corn at least could be vulnerable inside a technical formation, of which I know the internet's starting to get excited about, and perhaps it is. And in this, we're going to ask, can this do even better than where we are right now? And the simple answer is yes, it always can, but is it a high probability event? Is it a low probability? And how is it influenced by energy, the professional participation within the trend? So there's really a lot to talk about here. And I'm going to start it out by really talking about three time frames. The three of them are up. That's not much new. The primary trend has been up for 14 months, and it's produced a 52% return. I think that is the highest inside the grain market. The grain market here is highlighted in green. If you have your version of the matrix open, you can look at the current numbers. I'm not going to really include files within these reports. I think they just grow too stale to be super useful, so I'm going to phase those out. But you can pull up your matrix, and even if this one is somewhat dated already, past the origination date, you can follow along to see how corn is evolving, thus the evolution of the trade, because price of any asset evolves as time passes. And as we stand, the monthly trend is up, and it's up for 14 months. And you can see the time cycles and price cycles here. Here's the price cycle, and here's the time cycle. They're both still below 1, but they're highlighted blue because they're above 0, and they're starting to get a little bit old, and that gets concerning, and we're going to have to see how far this could theoretically go. This is back to 1959, so there's a lot of history here. Probably don't have to reach back into 1850 to know that this can go higher. This is pretty apparent for any asset within the matrix. It's not just corn. It really is. The price cycles and time cycles are relatively safe as long as they're below 0, and if they get above 0, as long as they stay below 1. And so far, all of that is taking place. And therefore, the computer doesn't observe primary trend decline 1 or primary trend decline 2, which it would label PTD 1 or 2 here in the phase column. So it is a long core position, and so far it's relatively untouchable. But the question is corn something that we're going to chase? In terms of a normal review, we talk about seasonalities often, and the seasonal cycle is fairly strong in December. Perhaps this is what's giving it the upward bias, and it stays that way largely until you get into the summer, which is definitely the weak period, and it's really a weak period from June to about November. So this is not in terms of seasonality. I mean, now the seasonality doesn't encompass forever. Corn has a long trading history here, not only in the globe but in the United States. This is only through 1959, but it's a pretty big database, so it's pretty reliable in terms of the seasonality. It does revolve around the cyclicality of the growing cycles within corn. So let's take a look at some of the bar charts here, and we can see where we stand. This is the corn ETN, which we follow. It trades on the New York Stock Exchange. I don't focus on the continuous contract or the front month contract because they do roll over. And I know the corn ETN stays out of the front month largely, so it might be there briefly, but in general, it stays in the back months, or it tries to probably, I think, in the next contract out, and I know it continuously rolls over. It's a good asset for the matrix to track, or at least the computer to track, because it's reliable. It somewhat follows the continuous contract, even though there is discrepancies, and I'm sure this can go into a discount and premium at times. But what we're most focused on is the reversals, and if we have the reversal tab. Inside the reversal tab, if you pick out corn, you're going to pull out this, and I'm going to focus on the weekly. The monthly gaps are really long term. There's a lot of them because there's a long trading history within corn. The weekly is less, shows really about the same information, but there's kind of less of it, and the daily has a lot. The daily's got a lot of noise, so the weekly provides us the best reference point for corn itself. And what we want to do is we want to pull these lines up and we can draw them. The computer does it right here for us. But if you do it by hand, you're going to see something of this nature. You're going to see a bunch of lines above and below the current price, which is about 21.51. And you can see there's a lot of congestion around there. It's why the price tends to be slowing. It could mark that this is a high risk zone. And you're going to have to frame this in terms of both the pro index and the energy level that's taking place as it chugs through this. If it can jump the creek, it's going to jump up into this zone here. But if it does fail here, there's really no resistance here. The next resistance zone or supply and demand zone is down in this level. So we could curl over and fall back down, even though visually it looks like there's support here. And perhaps there is, and the computer hasn't identified it yet. This seems to be catching, but I do think the downside risk is way down here with a 17 handle on it. So if we fail at this congestion, the real concern comes is, do we come back down and test these zones right here? And the computer shows some of that right here. This is our attempt to do it by hand. This is done automatically, and it shows you the trouble that there's just a lot of action that's taking place currently around 21.51. And I know a lot of people try and tie the fundamentals into all this and explanations for it. I don't have access to any of that, and I make no attempt to do that. This is the computer's look in terms of how everything's taking place in terms of the resistance of the supply and support zones, supply demand zones, both above and below price, and whether or not there's enough energy to take the price higher. And what really stands out in terms of corn, really, and what makes it a mid-cycle play, and it's been like this for months, probably since back in May, is the weekly trend. The weekly trend is what's vulnerable. The weekly trend has a price cycle of 1.1, and this is a truncated database, and we're going to have to look at a longer term one, especially for the report. But in terms of this review, you can see that at 1.1 and near 3 standard deviations, that's where the problem lies within corn. It's the height of the box and the width of the green box, and we don't have a ton of observations, and that's why we're going to have to ask, is this really a setup that's completely it's completely extended as we look at it in terms of the matrix. For those who are going to participate in the corn report, we're going to address that specifically, and I'll give you a quick hint. It doesn't get much better. I mean, if you sign up and buy the corn report, we're going to take a look and we're going to give you some more information, but as a heads up, This is a pretty tall and pretty wide box, and I wouldn't mess a lot with this again. And we're going to have to discuss that further. In terms of the extension in the cycles, which it's hard to see in the daily chart, and the weekly shows the suggestion of the extension, the height and the width of the green box. But really, and you can see it here. I pulled it forward down below it. We can see the very high cycle readings. When we pair that to the energy, I think that's when we start to get some concerns. Even after Friday's close, you can see energy build has fallen to minus 68 and minus 6 on DI2. So what it's telling you is this a fairly large spike, and this is, although DI2 is not much below zero, but it can get worse. And we can see that there's really no one participating in the contract. When you take that and pair that with the enormous congestion zone that we have here and growing bearish energy build, it's enough to raise an eyebrow of concern and ask, well, what if? I mean, and really to answer that, we're going to have to go deeper, and we're going to have to look at the power behind this energy build. And I'm going to have to save that for the corn report over here. So again, if this is something that's really interested to you, I want you to take a look at that, or I encourage you to do that, not so much as a means of herding you into additional products. It's really the discussion is much deeper than that. This is a troubling energy build on some level, even looking at it here. Although participation is low, that suggests there's a lot of indecisiveness and not a lot of interest, and that's not consistent with something that wants to jump the creek. When we talk about the Pro Index, and the Pro Index is something that the regular subscriber can follow as well. Here, you can click this link and you're going to get a chart that looks like this. And what I marked here is this dotted line represents the high in the Pro Index, and it came after price made a high. We came and made an impulse here. And what I'm starting to see is as price now moves sideways, professional buying hasn't crept out and jumped the creek either. There's a lot of indecisiveness where the selling's taking place is in the public space, which is in itself a good thing, because you don't want the public to be leading the charge. But so far, the professional players aren't leading either, so this is not as decisive as one would think. And that's what my concern is. The internet is extremely bullish. It's seeing this turn here, and it's saying we're ready to jump the creek, and it's probably calling the fact that it's crawling out of the consolidation. Perhaps someone drew a downward trend line right here and said, wow, this is a breakout. I really don't use trend lines. What I'm seeing is this huge level of congestion here. It has to get through that. If it does, it has a chance to get up in here. But again, what the real concern lies is the weekly price and time cycles, the height and size of this weekly impulse, which stands out quite obviously here. It's not improving, and we see it every week every day we update the matrix, every week we update the matrix, and it stands there. And it is a real warning that this could come down. The daily trend can come down, and it's going to come down and affect the weekly trend and turn it down too, and have a similar setup that we've seen in the soybeans market. And perhaps after all the pieces are reset, then corn will be a better setup. But again, it's difficult to be extremely enthusiastic, at least on the surface. But to really understand the power or what is taking place in corn, we're going to have to look deeper. And I don't want to do too much more because this review is already pushed to 13 minutes or so, and that's quite enough. I mean, I can't. I know people don't have the attention span, or they just want to know buy, sell, or hold. And this is not. This is a market that's certainly a buy, but it's how concerning the cycles that we see on the weekly, and what does this energy build really mean? So at this point, I want to thank everyone who's watched this review for taking the time. Corn's a difficult market. Don't be impulsive. Try and watch the matrix. If you're not going to get involved with the corn report, make sure that these things reset before you get really aggressive, because you'll likely come to regret that. We're going to take a look at how extended these numbers really are within a long-term database, but that's not something we're going to take the time to do right now. So thanks for watching, and we'll talk to you real soon, and we'll keep you updated on the corn market.